It's a big week for us since we closed out September and we got our monthly readings in. So we're going to go over those and then we'll get into this week's operating plan. First things first, we look at the 12-month momentum of the S&P 500 versus the MSCI All World ex-USA Index versus short-term treasuries. The S&P 500 is still greatly outpacing the international MSCI All World ex-USA Index and short-term treasuries. So I want to continue to focus on the US markets there. Secondly, now that we know that, we want to look at the style. Large caps have started to outperform small caps, and so we want to rotate there. Secondly, growth versus value. Growth is still much stronger than value, and so we want to continue to focus on growth. And then lastly, when we put all this together, and along with our shorter term indicators, we get our barometer. Our barometer simply tells us, do we want to be taking the sell signals? Do we want to be taking the buy signals? Which ones do we want to be taking? And it's telling us right now that we want to continue to take the buy signals and have a risk on stance. So with that, let's look at the S&P 500 and get a little bit more granular. Y'all, I didn't change anything from last week. I just copied this chart over here. And really, it's the same thing. The S&P was down 0.54%. There wasn't really any follow through. But, we're still above the breakout, above that bullish support line. We're still within the bull channel. And so really nothing changes until we either break the bull channel, it falls back into this trading range, or it breaks above the channel, which would be euphoric. So, still looks good for here. Of course, the bulls really want to see some upside this week. And if we do see some downside, then they definitely want to see it hold support and within this channel. When we look at our current holdings, the U.S. equities, it was mixed for them. They were up on a couple and down on a couple. So it was pretty mixed week as far as the U.S. equities go. Commodities remain flat, down a little bit for the week, but like we talked about last week, they're still well within that trading range. And then the one that I was most concerned about, which was the treasury position, it held on support. So it's still on support, it's still hanging in there. But I'll tell you what, if we get a rally to the upside, unless it really looks strong, like it's going to break out to the upside of that channel, then we'll probably just sell out and before it even breaks down and hits support. So I don't know if it will rally back up like that, but if it holds, we don't see a strong rally, but a relatively weak one, then we'll do that. So as far as new purchases for this week, we're going to rotate out of small cap and rotate into large cap. And then we have one more, and I'm going to show you a chart of it right here. And here's a look at the US dollar, which could be our most recent addition, depending upon price action. If we get a break to a high right here above last week's price action, then we'll certainly act on it. That would be a buy trigger. The reason we like it, really three reasons right here. We've got a recent high. So you can see price made up here, made a new high. And then when it did fall back, we held support. That's number two. We held support. And this is a flag. This is sideways price action. It held support there and made an up move, and then finally price crossed over those moving averages. And so all of that looks good. It builds a bullish case. Don't know if we get the trigger this week. If we do, we'll surely act on it, and then we'll have a stop way below here. Okay, so there are two things that we're going to focus on this week. Number one, rotate out of small caps and then rotate into large caps. The second is that if we get a buy trigger on the US dollar, then we will surely take action, add that to the portfolio, and just add a little bit more risk to the portfolio. So with that, have a great week, and we'll talk to you next time.